who are joining us both in person and virtually. Let me welcome on stage the BIS Economic Advisor and Head of Research, Mr. Hyung Song Shin, to moderate the conversation.
Well, thank you, Kodruta, and thank you to Agustin and Francois for opening this event. My name is Hyun Song Shin. I'm the economic advisor here at the BIS, and it's really my pleasure to moderate this first panel. I think Francois laid out the apparent sort of tension very well between central banks, who are very much the guardian of stability on the one hand, versus innovation on the other. But in a way, central banks really have to be at the center of much of the innovation, because central banks issue the unit of account and is ultimately there as the guardian of the trust in money. And all the economic activity that we see ultimately builds on that. And in that regard, it's really my pleasure to have this conversation with three governors that are really at the forefront of the innovation activities around central bank money. And I put it like that, rather than CBDCs as such, because the themes are really very timeless. And they go beyond some of the sort of more narrowly posed questions surrounding CBDCs. So what I'd like to do, and so let me introduce the panel, and let me go in alphabetical order. So online, we have Governor Shaktikanta Das, who is the governor of the Reserve Bank of India. And as you know, India has really been at the forefront of digital innovation, especially with regard to their digital public infrastructure. And the RBI has also been very much involved in the piloting of CBDC experiments, both for retail and for wholesale CBDCs. Joining me here on the stage is Joachim Nagel, the president of the Deutsche Bundesbank. I mean, not only is he a very familiar friend, and of course, he's leading one of the most important central banks, but we're particularly happy to have Joachim here because he's leading a very ambitious transformation agenda at the Bundesbank, Wandel, as it's called. And I think there are some very, very important lessons that we can draw from there. And online, we have Governor Fabio Panetta of the Bank of Italy. He's also, Fabio is also chair of the BIS Committee on Payments and Market Infrastructures. And in that respect, has really an unparalleled vantage point on central bank activities on digital innovation, especially in the payments arena. As Agustin mentioned, this is not simply a matter of digitizing central bank money, either for use by individuals or as the main settlement medium that preserves finality. But it's the fact that this property of central bank money as being the ultimate settlement asset is also underpinning a lot of the important innovations that are happening where we are combining the digital information in the underlying commercial bank money or central bank money, but also putting them on a programmable platform and thereby combining the digital information with the rules and logic that govern the use and govern the transfers. And this is what's ultimately underpinning tokenization. Agustin mentioned Project Agora, which is our latest project in this regard. And we have great hopes for this. But it's, I think, something that shows the potential for what can come in this direction, in this field. So what I would like to do, if I may, is to start with Fabio. And Fabio, as the chair of the CPMI, you have this really unparalleled sort of vantage point on all the experiments that are going on within central banks. And perhaps it would be a good way to start this conversation if you could give us some insight on what you see as being the key considerations for central banks in their development of both retail and wholesale versions of central bank digital currency.
Thank you, Yoon. Good afternoon, everybody. And first of all, let me thank you for and the BIS for the invitation to join this conference today. It is a great pleasure to participate in the BIS Innovation Summit and to discuss these very timely, relevant issues. You're right. As chair of the CPMI, I have the benefit of a broad perspective across the CPMI memberships, but also for jurisdictions beyond the CPMI. I have a chance to see the CBDC journey unfolding in different ways in different jurisdictions. Since 2017, the CPMI Secretariat has been collecting information from central banks to understand the current state of CBDC work, central bank modulations, and also the likelihood of issuance of CBDCs. The 2023 results have not been published yet, but of course, I can break the rule and share with you three key observations. First, more than 90% of, almost all, 90% of central banks are exploring a CBDC. The work is progressing to more advanced stages. More than half of the central banks are conducting concrete experiments or working on a pilot. Second, the motivations and drivers differ between retail and wholesale CBDC. It is important to distinguish between these two categories because they clearly serve two very different purposes. You know, just as banknotes and coins are very different from reserves held at central banks. Wholesale CBDC is about innovating the activity of intermediaries on wholesale markets, while retail CBDC is simply about the provision of a digital form of cash that would allow consumers to use central bank money in a digital format. Now, central bank money is only physical, paper banknotes. The CBDC survey shows that central banks are increasing their attention to wholesale CBDCs. We see a sharp increase in the number of wholesale experiments. Moreover, the likelihood of central banks for central banks to issue a CBDC within the next, let's say, 6 years is now higher for wholesale than for retail CBDC. And third, there are significant differences across countries. Each jurisdiction is unique in terms of its local conditions, the features of other payment systems, and its policy objectives. This influences the motivations of central banks in exploring a CBDC. Some central banks see CBDCs as a tool to safeguard the role of central bank money as the anchor of the monetary system, both in the retail and the wholesale level. For example, some central banks are considering a retail CBDC in order to ensure public access to central bank money amid the rapid digitalization of retail payments and the decline of cash. Other central banks are exploring retail CBDCs mainly to promote digital financial inclusion and to improve payment efficiency while ensuring cybersecurity and the right to privacy. For example, by ensuring universal access and by embedding new features such as offline payments. In the wholesale context, various central banks are exploring wholesale CBDC as a settlement asset for tokenized wholesale transactions. For other central banks, instead, CBDCs can be a way to bridge the traditional financial sector with the decentralized finance environment and to offer an opportunity for innovation that goes beyond payments. Also, some of the retail CBDC work is partly motivated by the increasing popularity and risks of digital private money, such as crypto assets. So overall, the ultimate goal for a central bank issuing a CBDC is to provide additional opportunities for intermediaries to meet the demand of people and market participants for financial services that are efficient, safe, and affordable. Let me be clear on this. Central banks need to identify what the essential design features of a retail CBDC should be in order to be an efficient payment instrument, and which elements of existing solutions should be reused in order to avoid unintended effects of on the payment market. But in order to do so, they should engage with a wide range of stakeholders, from legislators to retail payments ecosystems and the broader public. In this regard, the evidence collected in the context of the Eurosystem Digital Euro project seems to point to a common vision that a retail CBDC should be issued by a central bank and distributed by supervised intermediaries to their clients, as it is currently the case for cash. Cash is used by central banks, but is distributed by commercial banks. Let me conclude by emphasizing that CBDCs could also improve cross-border payments. How? Well, by increasing the speed and transparency, facilitating access and reducing costs. But of course, it must be clear that ultimately the decision on CBDCs is a sovereign one. It's a decision by governments. This underlines the importance of cooperation among jurisdictions. Some jurisdictions may introduce a CBDC, while others may not. And for this reason, some are moving faster than others, and there is a risk of fragmentation, which would hamper cross-border payments. So in order to offer users a seamless payment experience, both domestically and internationally, we should ensure that CBDCs are interoperable with existing payment systems, but also with other CBDCs. Cross-border CBDC is part of the work program of the Committee on Payments and Market Infrastructure for 2024. Yoon just mentioned that I chair the committee. The committee is currently working to identify how central banks can effectively cooperate on cross-border CBDC functionalities. Initiatives between central banks and the BIS Innovation Hub, and in particular, discussions as today's conference are therefore very valuable. Thank you, Yoon.
Thank you very much, Fabio, for that really great overview. So I guess one message that Fabio has just laid out is that since 2017, when the CPMI started the survey, there's certainly been a great deal of interest among central banks in pushing the digital agenda. But there's been a shift in the last year where there's been a shift in the center of gravity, if you like, somewhat more towards wholesale applications, which I think is also laying out very clearly that the customer-facing activities will have to be borne to a large extent also by the private sector. And so it's this two-tier system that Agustin mentioned in his opening remarks that are really going to really be a key element of this. On the cross-border element, perhaps we can come back to this, but First, let me turn to Governor Das. Shaktikanta, in my opening remarks, I alluded to the fact that India has really been at the frontier of digital public infrastructure. We all know about the Unified Payments Interface, or UPI, which is held up often as a great success story. But the RBI has also been at the forefront of various experiments and initial work on both retail and wholesale CBDCs. It would be great if you could share with us on the current state of play and the lessons that you have learned so far.
Thank you very much for inviting and giving me this opportunity to share some of my thoughts. Now, I sincerely believe that CBDC, with its unique technology, has a transformative potential. In response to the specific question that you have put, I would like to highlight the Reserve Bank's motivations and experience in running the CBDC pilots, both in retail and in wholesale mode, their design principles, and our key learnings. I shall also touch upon the unique steps that we have taken and the future work in this space. UPI, as you have mentioned, is now witnessing about 13 billion transactions every month, 13 billion transactions every month. Now, despite this very impressive progress, there is still considerable scope for increase in digitalization of payments. This can be facilitated through CBDC, which has the same advantages of cash, namely anonymity, ease of usage, and finality of settlement. Specifically in the context of cross-border payments, the feature of settlement finality can substantially reduce the cost of transactions. Further, CBDC can drive financial inclusion and provide much safer alternatives to private digital currencies, which are, according to us, potentially dangerous. In India, we have adopted a phased approach to CBDC implementation. The wholesale pilot was launched on November 1st, 2022, and the retail pilot was launched a month thereafter on 1st December 2022. The pilots have tested the entire process of digital rupee creation, distribution, and usage in real time. The wholesale pilot use account-based CBDCs and are currently focused on government securities transactions using a centralized ledger and overnight call money transactions between banks using distributed ledger. The basic objective of the wholesale pilot is to mimic the settlement efficiency of cash, as it removes the need for central counterparties, settlement guarantee infrastructure, or the need for collateral. Wholesale CBDCs can help in better monitoring of transactions from a risk perspective by moving to what you call a delivery versus payment DVP1 method, wherein both the cash leg and the securities leg of a transaction are settled on gross basis, as against the present DVP3 mode, where both legs of transaction are settled on a net basis. Now, going forward, other instruments like commercial papers, certificates of deposit will be tried out in the pilots, along with securities tokenization features. The retail pilot uses token-based CBDCs on a blockchain and enables both merchant payments, that is P2M, and person-to-person, that is P2P payments. The retail pilots are expected to create familiarity with the CBDC, which has features of both cash and digital instruments. We have leveraged the existing merchant infrastructure on the UPI to facilitate CBDC transactions. We have also enabled interoperability of CBDC with UPI. While the number of transactions have reached a high of 1 million a day, we still see preference for UPI among the retail users. We, of course, hope that this will change going forward. Now, going forward, the advantages of CBDCs will be more visible when we enable offline use and programmability features. Let me also mention that a key objective of the pilots has been to study the change in consumer behavior vis-a-vis bank deposits. We need many more transactions to understand its wider economic effects, especially on monetary policy and the banking system. I would now like to turn to some of the important design principles and key learnings from the pilot, and I would like to list them out. First, we have envisaged our CBDC as non-remunerative by making it non-interest bearing. This feature should mitigate any potential risk of bank disintermediation. Second, we have adopted a two-tiered distribution architecture where the central bank creates the CBDCs and the banks distribute the CBDCs. Third, the digital rupee CBDC currently has fixed denominations similar to physical currency. This makes it easier for users to relate to CBDC as a digital form of cash. We are, of course, open to other design choices and will try them out in our future pilots. Fourth, anonymity can be addressed through legislation and or through technology. For example, through permanent deletion of transactions. That could be one method. The basic principle is that CBDC can have the same degree of anonymity as cash, no more and no less. Fifth, one of the key features of cash is that it works offline. We are working on making the CBDC transferable in the offline mode also. We are also introducing programmability features to promote financial inclusion and provide other value-added services under CBDCs. Sixth, the design and scalability of technology like permissioned blockchains for CBDCs, which we are using currently, require improvements to meet the challenges of population-wide adoption. Seventh, and finally, we have also recently announced the participation of non-banks in the pilot, with the expectation that their reach can be leveraged for distribution of CBDCs and for providing value-added services. To conclude, let me say that so far we have gained significant insights from the two pilots, wholesale and retail, on various aspects such as design, technology, and user behavior. These insights are facilitating scalability, resilience, and agility of the CBDC system. The pilots are also enabling us to make informed decisions like positioning the CBDC alongside the UPI. CBDC offers unique value proposition as a currency system, a store of value and anonymity while complementing the existing digital payment systems. I will stop here. Thank you very much.
Thank you very much for that overview. There are a couple of things that I think would really be interesting to follow up, especially the link between the retail CBDC and the existing payment system. I think this is a question that many central banks face, which is how much weight should be put on fast payment systems, how much on retail CBDCs. I think what you've described is that you're designing it from the ground up to make sure that these two systems are interoperable. But I would like to follow up on that in the second round. Joachim, it's great to have you here. Thank you for joining us. I'd like to tell you an anecdote, actually, before I ask my question to Joachim. Recently, we had the BIS Leadership Forum, which is a forum for the managers, everyone from the middle management up, and it's a way to sort of renew our purpose. And we invited Joachim to give the keynote speech, and he gave a very, very inspiring keynote speech where he described the transformation process that he's leading at the Bundesbank, Wandel, as it's called. And Joachim, you said that innovation is a key part of this process. You compared this whole process to running a marathon, where you need the preparation, the training, and a strategy. So share with the larger group what you told us, and where does the digital euro and the whole CBDC program fit into this transformation process?
Thank you very much, Yun. The truth is that I never did a marathon on my own. So, but first of all, it's really good to be here, part of this conference, doing this panel with my esteemed colleagues, Shaktikanta and Fabio. I have the pleasure that Frankfurt is so close to Basel. So for me, it's just a 300-kilometer trip, 200 miles. And for many of you, I realize that I guess some of you are jet lagged to did such a long trip to come to Basel. This is wonderful to discuss this very important topic. I come back to what I did in that speech when you referred to the management conference, and I'm really happy that I gave some food for thought. I think we labeled this change of the Bundesbank Wandel. Wandel is the German, let me say, expression for change, doing something different. And I can tell you the tradition of the Bundesbank, a 70 years tradition, it is a challenge to change a central bank. And I'm not sure if central banks are really used to these changes. I think the last change the Bundesbank did, the most significant change, went back more or less 30 years ago. So when the board of the Bundesbank came back 2 years ago and explained to the colleagues, yes, we want to do something different, everyone was a little bit shocked that something is coming from top down and they want to change something. Often it was the other way around. So, but after 2 years, everyone is now completely aware of the fact that we have to change. And now I'm coming back to what we are discussing here. The world outside is changing. It's becoming more digital. So, and also the business model of the central bank is changing to a certain extent. Yes, I guess in 10 years, I guess the mandate of central banking will be the same. It's safeguarding price stability. But how to get there, all the instruments we are using, the services we are providing, they will be, it's my forecast, completely different from today. And so it was clear to me, to the whole, let me say, board of the Bundesbank, that we have to change. So what we did is that we tried to find out a way how to get there. I think it was clear that we have to change the way we are working together, overcoming silo thinking. This is of utmost importance. Then embracing new technologies, also find the right people to do this. I think this is also a very challenging part. People with a different background, not the typical background we have in central banks, that we had in central banks over many, many decades. And then also what we learned is that it's communication. It's all about communication, to really convince people internally we did something good for the last 7 decades, but now we can do it in a different way, or we have to do it in a different way. So we started it also by changing internally all what we do in terms of processes, front-to-end process, how to make this more digital. So we became, let me say, a kind of a startup central bank, how to change things from front to end, using new technologies. We established a new department. So the new department head, she's sitting over there. It's about strategy and innovation, Camilla Holtgreve. So we are trying to find a holistic way how to do it. Now coming back to CBDC, this is what you asked me. I think what we learned over the last 10 years, and especially in Germany, we are very addicted when it comes to cash, using cash. But over the last years, yes, we see that there is maybe diminishing attractiveness of cash. So if part of, let me say, your core product is losing attractiveness, then you have to think about another new core product that is standing as a complementary product beside cash. We don't want to give up cash. But now I would like to see that we really get to a kind of a digital currency, the digital euro, that is being one of the most innovative CBDC you can think about. It should be innovative for wholesale, retail, when it comes to tokenization, when it comes to privacy. And I'm I'm not a very patient person. Not a very patient person. And my colleagues, they know that I'm not very patient. So I think we lost some time already. And now I believe we have to speed up. And I'm happy to see my colleague from India, Shaktikanta, and I learned a lot what India achieved when it comes to digital currency. And I believe now we have the momentum in the euro system. And my friend Fabio and myself, we will push this. Bundesbank will play a significant role here, how to get to this digital euro. And I think it's a necessity to really get there. And beside that, we have to change central banking. And as I said, central banking in the future will look different.
Thank you very much, Joachim, for that sort of insight into your thinking. I mean, but I think what we all gained, from that dinner speech was, I think, the sense that we have to move. I'd like to turn to the second round, actually, and then turn back to you, Fabio. I mean, you can react to some of the things that have already been said. But one thing that I'd like to explore in the second round is something that you mentioned in passing, and also something that Joachim mentioned, which is tokenization. I think it links very much with the observation that you made that in the latest CPMI survey, we do see this greater emphasis on wholesale CBDCs. And in a way, wholesale CBDCs have always been around. I mean, they are the electronic versions of central bank reserves. But I guess it's the additional element of having this central bank money in the same venue as commercial bank money, perhaps other assets that allow programs to be written referring to all of these elements together, which thereby giving it greater functionality. And the CPMI has been working very intently on tokenization. You have the Future of Payments Working Group. In fact, the G20 has tasked the CPMI together with the BIS to write a report on tokenization and the broader systemic impact. So I wonder, Fabio, whether you could share some insights into your latest thinking on tokenization.
Well, thank you, Yoon. This is a very important question, and you are absolutely right. Tokenization is the next step, the evolution of wholesale CBDC, and they have to be made compatible. First of all, let me say that the idea of tokenization is not new. There is historical research showing that tokens predate the invention of writing and are as old as accounting itself. What is new is the technology. Technological innovation affects the way tokens are created and traded, and will continue to do so in the future. Let me start with a very basic, simple, but important question. What are tokens? Well, generally speaking, a token is a representation of something else. So why do we want to use a token? Well, one reason is that the representation may be easier to use than the object it represents. To make this concept clear, let me use a simple example. Imagine that you go to the theater, to a cinema, and check. No, you don't go to a cinema. You check your coat. You go to a theater and you check your coat. You give your coat, and you receive back a token, a ticket, to take with you into the theater. And the token, the ticket, would fit easily into your pocket. Would be much easier to bring with you the token, the ticket, than your coat. So in the language of economists, tokenization reduces frictions, such as those associated to storage, transportation, and exchange. Moreover, as you often remind us, money is a social convention. I would argue that the same goes with or for a token. Take the example I just gave you, the example of my coat. I accept the token, trusting that the person behind the counter the person who gave me the ticket before will be kind enough to keep my coat safe and return it to me after the show. But what happens if he or she doesn't? Well, this simple example illustrates that tokenization offers not just opportunities, but as always in life, also potential risks. To fully understand its opportunities and risks, we need to look beyond the token to the platforms on which the tokens are listed, often using DLTs, the distributed ledger technologies. Platforms can, the fact that they facilitate a range of functions that are typically segregated in conventional market infrastructures such as issuance, trading, clearing, settlement, and asset servicing. This can lead to potential efficiencies by cutting out intermediaries and streamlining processes. But as I mentioned before, this also implies additional risks. For example, what if the token does not represent a one-to-one enforceable claim on the underlying asset? In that case, I cannot rule out the possibility that I may lose value to the underlying, relative to the underlying asset, or even end up with a worthless token if the asset is not there, if I don't get back my coat in the end after the theater. An appropriate legal and regulatory framework to secure the link between the token and the underlying asset is crucial. For example, the legal status of the token should be clear, and conflicts of interest between the holder of the token and the holder of the asset should be clearly addressed. But the risks clearly go beyond the legal and regulatory dimension. We also need to consider settlement finality, access, operational risks, cybersecurity, and fragmentation across platforms, and many other potential sources of risk. Against this background, tokenization stands out as an opportunity for central banks to improve wholesale transactions in central bank money. As I mentioned earlier, many central banks are now involved in CBDC projects, in wholesale CBDC projects. Let me give you an example from the Eurosystem perspective, as the Eurosystem is experimenting new solutions based on DLT, and how these experiments could interact with the target services. The target services are the infrastructure that we use for interbank transactions in the euro area. So how this could be used to interact with target services to settle the euro cash leg of transactions in central bank money. One option we are currently examining is to create a technological bridge between the central bank's cash settlement system and the external private DLT platform that manage tokenized digital assets. This option focuses mainly on use cases such as delivery versus payment, secondary market transactions, and life cycle management of securities. But we are also exploring another option that is an option based on the creation from scratch of a Eurosystem DLT platform for Euro central bank money settlement, combined with a technical interface between this platform and market DLT platforms. Based on this work, the Eurosystem has developed a framework to carry out exploratory work in 2024 together with the market. And the objective is to understand concretely what value added new technologies such as DLT could bring to wholesale settlement and capital markets, and how the different options compare from a business, operational, and technical perspective. Let me conclude by saying that tokenization is extremely important to the Committee on Payments and Market Infrastructure, to the mandate of the committee. As a standard setter, we continue to focus on the safety and efficiency of payment, clearing, and settlement. The core business of the committee will still hold. Its values will still hold, such as proper risk management, good governance, and clear and robust legal framework. But of course, this would be true whether tokens are used or not. Let me stop here. Thank you.
Thank you very much, Fabio. The importance of the legal framework, I think, reminds me of this of the saying that you quite often hear from the crypto community: code is law. But I think, Fabio, what you're saying is the law is the law, because you need some way of tying down the token with the actual underlying asset. In the same vein, Joachim, can I turn to you and perhaps pursue the notion of the unified ledger that you mentioned? Also, Agustin gave great prominence to it in his opening remarks. This is the idea that when we have a tokenized platform, when we have central bank money, commercial bank money, and perhaps other claims all on the same programmable platform, that we can actually achieve greater functionality. What do you see as being the biggest benefits of such a platform, and what do you see as being the biggest challenges?
I think, first of all, unified ledger technology is a very promising technology. This is for sure. I guess it's much more than maybe a vision to use, or in the future that we can take advantage of the full scope of the unified ledger technology. I think it is really more than a vision. I used once, when we met in Washington during the conference, we had a different discussion about that, a quote that came from a former chancellor of Germany, Helmut Schmidt. He once said, if somebody has a vision, he should ask a help for a medical doctor. And so I believe it's much more than this. That DLT is, for me, not a vision. It's something we should really use when it comes to central banking. And it was many times we refer to the Agora project. Augustine mentioned this, also Francois. And Agora is a marketplace. Agora is the ancient Greek name for marketplace. And a marketplace that takes advantage of, let me say, bringing together the central bank community and the private sector. And it was already said by Fabio, there are still some, let me say, open question how to get to the right legal framework. But I guess these are obstacles we can try to overcome, we can try to solve. I do not see that this is, for me personally, an ultimate constraint, but we have to think about, because it also goes deep into national legislation. So it's not an easy something. This is for sure, but I believe it is really something we have to work on. And it is, as I said, not a vision for me, that maybe I hope in the near future, we will have a DLT-driven platform that is covering all the services and interconnections we could provide as the central bank community to the whole world. And it would be a huge mistake not to get into such a direction, not to work on this, having a better knowledge. And as I alluded to in my first answer, I think this is much more than maybe a kind of a thing we can work on this, and really we can take enough time. I think we do not have this time. We have to really, as I said, to speed up on all this, because otherwise, if you would have asked me, I know it is recorded. If you would have asked me, if you would have asked me 20 years ago, is the central bank business model really, is it destroyable, yes or no? I would have said clearly, no. Now I'm not so sure anymore. And this is a reason, and that is the reason why we are sitting here. we have to work on our business model. And DLT is just a mean, or it's an instrument that could help us here to really get to that point.
Thank you very much, Joachim. In fact, there will be several sessions actually during this conference on tokenization. And I think we'll also hear immediately after this panel from Thomas Jordan the great strides that the Swiss National Bank has been making in the Swiss context on some of the sort of functionalities. And there's also actually, going back to the previous point on the importance of the legal framework, there's actually also a very important session on the legal framework surrounding tokenization. So enough of the advertising. What I want to do actually is now turn to Governor Das. Shaktikanta, you mentioned that one of the key sort of imperatives of your CBDC pilot program was to ensure interoperability between your retail CBDC on the one hand and the fast payment system on the other with UPI. And I think this is actually one question that we get a lot when we discuss CBDCs in the context of financial inclusion, in the context of the development of the monetary system. How do you decide whether you should put more effort into the fast payment system, the existing fast payment system, versus developing a new platform, a new instrument, and what are some of the synergies between the two? And I think, Shaktikanta, I think your experience shows that it seems that it is very much compatible, but presumably this is something that really needs a lot of consideration at the design stage. So perhaps you could share some lessons from your experience.
Thank you, Hyun, for raising these points, very relevant. And I must say that the interventions of both Joachim and Fabio have been very, very useful, and look forward to further deliberations and discussion on this matter. Now, I agree that there should be some connect between the existing fast payment systems and the emerging systems based on tokenized money, such as CBDC and tokenized assets, etc. In India, while rolling out our CBDC pilot, we have kept this aspect very much in mind. Benefits of tokenization are many, and the efficiencies are best realized when all components, that is, funds and assets, are tokenized. However, extensive study is required to substantiate these benefits. Further, token-based systems enable certain unique features which are currently not possible in the case of fast payment systems. Under the retail CBDC pilot in India, the feedback from the users reaffirmed the need for a connect between fast payment systems, that is UPI in our case, and the CBDC. We have combined the CBDC QR code with the UPI QR code and made it a single point of acceptance. We have also introduced interoperability between UPI and CBDC. Thus, if a customer makes a CBDC payment, the merchant can receive the money in his UPI-linked bank account if he does not have a CBDC wallet. On tokenization, I understand that there are several projects being undertaken by the BIS Innovation Hub in collaboration with central banks across various jurisdictions. It is generally believed that tokenization can improve efficiencies through atomic settlement, improved transparency, and regulatory compliance. It can also enable fractional ownership, efficiency in clearing and settlement, investor confidence, and possible cost reduction when deployed at scale. There are, however, potential challenges of technological scalability, interoperability, governance, accountability, etc., which need to be further deliberated. Having said this, let me also say that token-based systems present some unique advantages. Tokenization introduces two key concepts, namely smart contracts and programmability. The benefits from smart contracts and programmability arise from automation, which enhances efficiency, reduces reliance on intermediaries, and enables faster settlements. This in turn can lead to unlocking new possibilities in the financial system. For example, some functionalities like offline payments may be easier with a token-based CBDC than with a fast payment system, as tokens can be stored in the user device and would be available for transactions. On the other hand, in a fast payment system, connection to a central database would be required for every transaction. In case of programmability, token-based CBDC would allow a user to hold more than one type of token within a single wallet. Cross-border payments is also another area that is especially ripe for change and could benefit greatly from tokenization and unified ledger proposed by the BIS. Further, integration with smart contracts can enable execution of complex transactions automatically, fostering efficiency and reliability. I would now like to conclude by stating that in an ecosystem where both traditional and emerging technologies play an important role, interoperability between the two, that is fast payment systems and the new tokenized money, interoperability between the two will ensure that both work in tandem without causing a fragmentation. This would require a strategic and collaborative approach between central banks, financial institutions, and the fintech companies. The development of appropriate governance and operating framework spanning more than one country is a complex and very challenging, is a very challenging task ahead of us. I would like to urge the BIS to give specific attention to this area also, and we would be happy to be a part of that entire process of working further in this direction. Thank you very much.
Thank you very much for those insights. We are drawing to a close. Let me just give an opportunity to the panelists to come in with any reactions if they wish at this stage. But if not,
I guess
Fabio, did you have something?
No, I only a very brief observation. I wanted to fully agree with Joachim when he mentioned that central banks in 10 years from now will be different. And I would expect that given the discussion we have had today and the importance of payments, digital instruments, there will be less economists, I'm sorry, Yoon, and more data scientists, more physicists, more cryptographers. The business will be the same, but as Joachim mentioned, the implementation of the mandate will differ substantially, and there will be a broader and more heterogeneous range of skills in central bank boards. But thank God I would be retired by then. Thank you.
Well, thank you, Fabio.
But
I think,
Yoon,
yes.
Yoon, maybe let me say, this is the reason why monetary policy in the Euro system is working so well, because Fabio and myself, we are agreeing on all the things.
I think, Fabio, what I would say is, data science, can be seen as a sub sort of area of economics. I mean, it is very much, it is part of, econometrics, statistics. So in that sense, I think so economists will probably be around. In fact, what I would really highly recommend are the sessions on AI, actually. We didn't really spend much time on AI on this panel, although we did cover many of the other areas. One of the really exciting prospects of Agora is that once you actually have a platform where you have commercial bank deposits and central bank money together in a programmable platform, many of the frictions that is currently holding back cross-border payments can see really quite substantial progress. And I think, the one area where AI and machine learning is known to work is in these compliance, heavy processes. And Morten Beck, who is leading the Swiss Center, will have more to say about this shortly. But for now, let me thank the three panelists for this great way of kicking off the event. And I think we learned a lot, and I think we've come away being inspired and being better informed than ever. And I think we're just about in time, actually. So why don't we give the stage to the next session, which is Thomas Jordan. So thank you.
Thank you to all distinguished panelists and to Hyun for an interesting conversation. At the BIS, currently, the code check system, can you hear me? It's not tokenized, but no worries, you will receive your codes back. And we will definitely consider it for next year's summit. I think we're all excited to see where the CBDC journey will bring us. Our next guest will speak about implementing a CBDC in a real world. Let me welcome the